Hey everybody, it's Eric Jantz here with North American Insurance Services. And starting off this for today, we're going to talk about the opportunity. We've talked about the problem, the solution. We've talked about cross-selling. Today we're going to talk about the opportunity. If you can see the screen here, let's see. Make sure that you visit the website. We've got new content every day this week on long-term care, and we've got a secret word of the day. If you collect all 5, you can turn those in, and we'll put you in the pool for a prize. And then, just as a reminder, you guys probably know this by now, but every day we have a different link for the webinar. So tomorrow's webinar has a different link than today's does. Today we have Kevin is back. He's on the camera this time. Kevin Riley with One America. Today we have Jake Lovell from Nationwide here, and again Rachel Smith from Concourse is here, and so is Misty McMahon. She's not on camera right now, and Phil Hogg, who's not on camera right now either. But they're all here again. And I'm going to show you a couple of things real quick before we get into it. So on the website, I put these screens on the website as well, although I will warn you that they're incorrect. I realized that I did some bad math. The ones on the website are incorrect, and so you should check for an update in the next couple of days. But we're talking about a lot about stacking products North American. So here's Renee Shannon's Medicare Advantage stack that she uses. So she sells the Medicare Advantage plan, but then she goes and shows them all these other products with Aetna, from hospital indemnity, the dental, vision, and hearing, the cancer, the heart with cancer as well, the home recovery care, the recovery care, and final expense. And she presents, hey, you can have all these products for just $291.80. And she's just turned that Medicare sale from $600 to $2,900, just like that. So I had a similar one with Steven. Steven uses Manhattan rather than, see, this is Steven Weinberger. He uses Manhattan rather than Aetna normally. And so this is an example of his stack that he uses. So what I did was I took Renee's, since hers paid out a little bit better, and I added your traditional Mutual of Omaha long-term care. And this is roughly, this is a male 65. You'd want to check all these numbers on your clients as well. But we just doubled that. We just took that sale into a sale of $4,384. And then I did the same thing, swapped that out. And what if we sold them a One America Asset Care Life and Long-Term Care, and you just turn that $600 sale into a $7,000 sale. So that's what we're excited about. One of the things we're excited about, not only helping people, but also making lots of money doing it. So I wanted to show you guys that. And now I'm going to open it up for these guys to start talking about specifics. There we go. Hey, everybody. So who wants to start us off?
Jake, I'll let you go. You can start.
Yeah, the new guy.
Sounds good. I appreciate it. All right. I think I just might need the controls turned over so I can share my screen. But while I do that, thanks, Eric. Certainly appreciate that. And I'm really excited about the opportunity to talk a little bit about our Care Matters 2 solution today. So if you give me 1 second, I'm going to go ahead and I'm going to share my screen. And Eric, how's that look? Are you able to see my why Care Matters 2?
See it.
Okay, perfect. Thank you. So we're going to go through a little bit around the opportunity, some things to focus on, some things to be aware of. So again, we're going to focus on Care Matters 2, which is our linked benefit asset-based long-term care product. So a couple of things, and first and foremost, what you'll hear is, as you can see, we're going to talk about the top reasons to consider Care Matters. The number one reason that we're going to talk about, and this is consistent with all of the true long-term care solutions that we offer at Nationwide, is the fact that it's a cash indemnity benefit. So of course, there's some things to consider when you're looking at a cash indemnity benefit. One is we don't put any restrictions in the policy on how the benefit can be used. There's no ongoing submission of bills or receipts. Essentially, once an individual qualifies and the claim starts, we're going to send the full monthly benefit to the policy owner. We pay the benefits, the long-term care benefits, to the policy owner, the full monthly benefit, regardless of what their expenses incurred were. So that's very, very important. They're going to receive the full monthly benefit unless we're instructed otherwise. Additionally, we also, as you can see, we allow for informal caregiving. So we allow friends or family members, somebody who's not a licensed caregiver, to be providing providing care for an individual. So that's back to the no restrictions, as long as it's appropriate for that particular claim and part of the plan of care. And again, we'll send that full monthly benefit in that scenario. The second reason that we'll look at why to consider Care Matters is we have separately identifiable premiums in the policy. So we break out all the premiums. And when you do that, there can be some tax advantages for individuals potentially, or what we see more frequently is for business owners and employees. Not the primary focus of today's call. It's, probably a topic for another day, but it is something to be aware of in the way that works and the way our policy is structured. Number 3, you'll see, as far as our elimination period goes, there's a lot of different solutions out there in the market, and there's a lot of different ways the elimination period works. With Care Matters 2, we have a 90 calendar day elimination period. However, what you'll see is we actually pay it retroactively. So what does that mean and how does that work? Well, an individual has to wait 90 calendar days during their elimination period. However, once that is satisfied, we actually will send them their first long-term care benefit payment for 4 months benefit. So we paid them the 3 months that they waited during the elimination period and the first month that they have now qualified. We have different refund and return of premium options. We have multiple options there depending on what's important to the client. Also, we have a residual death benefit associated with this policy. So an individual could have a long-term care claim. They could draw their long-term care pool down to 0 where the policy is completely exhausted, and we're going to pay out a 20% residual death benefit. It's 20% of the original specified amount. Now, additionally, as you can see with number 6, we've really tried to open this up to a wider audience, and we have multiple premium payment options. So when you look at an illustration or you're working with Eric on an illustration, there are multiple premium payment options. As you can see, we have a single pay, of course. We have a 5 pay, a 10 pay. We even have some extended payment options with a pay to 65 and a pay to 100. And we do offer the opportunity to pay either monthly or annually. Just a couple other things from an underwriting process. It is a streamlined underwriting process. So it's going to be either a phone interview or an online interview. We do need to have a cognitive assessment for ages 60 and above, but it is a streamlined underwriting process. So we, for cause, will order doctor's records, not standard, as part of the process. So with that being said, I know we just wanted to take a couple minutes to go through kind of some of the highlights and things to be aware of. I encourage all of you, as you're working through these opportunities, reach out to Eric, bring those opportunities to him, and utilize the resources that you all have available. So with that being said, I'm going to turn it back over to Eric and pause my screen, and we should be good there.
Great. Let me see if I can turn this screen off here. All right. So that's awesome. If anybody has any questions, this would be a great time to put those in the chat box, and I'll read those out as I see them. Kevin, what do you have to add for us today from Monday?
Let me start by touching on when we talk about the opportunity and where people really lie. On Monday, we talked a lot about what does the market look like, how many people are available. We have 108.7 million people in the U.S. over the age of 50 right now. 70% of them at some point in time in the next 30 years will need palliative care, whether it's at home, whether it's in a nursing home, whether it's adult daycare. It comes in many different forms right now, but 70% of them will face that type of a decision at some point in life. And then we talked about Monday, a lot of people think they're going to go through life, they're just going to drop dead, this is never going to happen. Yet there's that small space in time that they really don't think about or plan for. So you got 77.2 million people that are available to you that need care. What's interesting is we travel and we ask clients, why aren't you getting coverage for this? Or why aren't you talking to your advisor or talking to anybody about this? And what clients will say is, I don't know who to talk to. I don't know how to start the conversation. On the flip side, as we travel all over the country, we talk to advisors like yourself, we say, all these clients are looking for the coverage. They're more than willing to talk to you. Why aren't you starting the conversation? Ironically, what advisors tell us is, we don't know who to talk to, and we don't know how to start the conversation. So you have both sides that are in the same quandary. How do I start the conversation? Who do I talk to? For the opportunity, what we found, mention it to everybody. Every client you're dealing with on a Medicare side that you're talking about Medicare coverage faces this problem at some point in time. 70% will happen to an individual. Now, everybody thinks they're in the 30%. Everybody on this call probably thinks they're in the 30%. Now, the person next to you, you're probably telling them to get coverage because they're going to need it, but you're in the 30%. I think one of the things we don't think about in the 30% category is most of the people that never have it have died young. People are not living out their life. Look at your 85, your 90-year-olds. Myself and my wife have done a ton of marathons. My wife has done a couple Ironman races. I can tell you in all the marathons we've been to, there's not a whole lot of people in the 80 and 90-year-old category. Yes, yet it's the largest growing segment of our population. We're outliving our bodies at times. We're living longer lives, but are we living healthier? So there's several people that are available to you if you just start the conversation. And what these calls are about and the training is about, and the information we're sharing is, how do you start that conversation? What are the points that clients want to hear about? When you talk about product features, or you talk about the solution, I want to thank Jake for the time that he spent. I always like to focus on the fact that there's stark differences between policies. But the policy differences is not that either one's better than the other. It's what applies to that client's situation. When do you want to use indemnity? When do you want to use reimbursement? When is a residual death benefit make more sense than a policy like ours, which is a whole life policy, which does not need a residual death benefit? So you might be asking, well, heck, why don't you have a residual death benefit? The client's going to get something back. Well, we exhaust these policies to pay you the benefits before you get to the rider on the policy. And a whole life policy, we can exhaust the policy and there's no tax ramifications. In a universal life policy, you need a residual death benefit or a client's going to get hit with a tax consequence on the end. So is that a benefit? It's a benefit within the policy. They're doing a good job of saving you and your client to provide you with that, but which one fits their situation? And that's really where Concourse and Eric and other individuals come into place. When you identify these clients, they find the best fit for you. You know, what's going to work for the client. And it comes in all different shapes and sizes. So what makes One America stand out? What can we offer these 77.2 million people that are available to you? We're the only company that does lifetime benefits. Why is that a benefit? 1 out of 5 people will have a claim that's longer than 5 years right now. Based on the estimation of what the experience we've had up to this point and what they're looking at. What we haven't seen is 2/3 of all people age 65 and over in the history of the world are alive today. So we have a whole segment of the population. We have not experienced the length of lives or the amount of people that are going to be there. So let's just use today's numbers and say 1 out of 5 people will experience a claim longer than 5 years. What happens when it's a couple and you have a limited pay policy? Where we stand out from a lifetime benefit is in a joint policy where we pay lifetime benefits. The surviving spouse never has to worry about coming up with more money. Are they going to get coverage? Is it going to run out? Regardless of how long the first person's ill. The first spouse can be ill for 15 or 20 years, and the surviving spouse has the same amount of care available to them for however long they need it without ever coming up with another penny, without ever have to worrying about it, without ever having to change their direction that they're going in. So we're the only company that offers lifetime benefits. We're the only company that offers a joint policy. When you have couples, you'll find that One America probably stands out because combining two people for an unlimited period of time. See, when they get into this, they have an unlimited expense, they have an unlimited liability hanging over their head, and an unlimited expense. How do we address that? We can make it a limited liability for them with the money they have to come up for an unlimited period of time for two people on one policy. So you have one policy that covers two people, 3 ways to get your money back, which is no different than any other company as far as getting your money back. If you live, you're going to use it for long-term care. If you die, we'll pay it back in life insurance or an annuity. And if you want to, you can get your money back at any time, either the cash value. Some policies Jake was talking to have return of premium. We have a return of premium option on our policy. So the policy can be designed to meet the needs of the client. There's enough flexibility between companies and between policies. If it's a joint couple, one of them might not be very healthy. We're the only company in the industry that does people less than healthy. We're the only one that'll write diabetics, insulin dependent and or type 2. Now, does that mean every type 1 diabetic you're dealing with will get approved by us? No. They're going to have to be in good shape. They're going to, they don't have existing health problems from the diabetes, which may get them. But we will look at that. Mild to moderate depression, mild to moderate rheumatoid arthritis, we'll look at. Unless they're experiencing a claim now, they're on a walker, they're using a cane, they're cognitively impaired already, we're the last option for a lot of people that will look at individuals. We're the only company that's always had a true continuing pay. 5 pay, 10 pay, 20 pay, pay to 95 on a joint policy. So one of the things when you're looking in your book of business, when we talk about the opportunity, the average age of people buying this now is in their late 50s. Why is that? It's the baby boomers who are taking care of parents that are feeling the pain, they're feeling the financial pressure, they're feeling the emotional and social consequences of having not planned for this, and they're coming and say, hey, I want to do this. Why does continuing pay work? Why is it 75 or 70% of what we do now? Because those individuals, what's happening, are still paying off their mortgage, looking towards retirement, figuring out how to get the kids through college. So we can build a program, and there's other companies available that can build programs that fit their financial need at this point in time, get it done before retirement, pay overtime to make it cheaper, whatever they're interested in. We're the only company that has a life and annuity version. A lot of companies have one or the other. We have both. So we can issue people up to age 85. We're the only company that take qualified money. 65% of most people's assets is in qualified money. We'll take it in, give them a 25% bonus, put it in a fixed annuity. They never lose access or control over those dollars or the situation, ever. We'll drain the annuity over 10 years, use the annual amount to fund a life policy. They ever go on claim, and you can use one person's IRA to cover 2 people. Or what if you put a contract in and one person's not insurable? You could still use their IRA to basically buy a plan on the spouse and get lifetime coverage. We do Section 162 bonus plans for individuals that are out there. And like I said, we have our annuity option is out there. So we can build programs for your client regardless of their situation they're in. Now, how do we differ from the competition? Larry said, do we have a residual death benefit? No, we're a reimbursement company also. So what does that mean? That means you call us, you say we're getting care from St. Mary's Home Health Care. We call the facility, we put the plan of care together, we pay the bills directly, client gets a statement. You have to use a licensed care provider. Why did One America choose to do that? Let me give you a little bit of industry history. Back in the day, back in the 80s and the 90s, 70s, when these products were more traditional and they were just getting up and running, everyone in the industry had both reimbursement and indemnity. One America used to. Well, the reason we don't anymore is 2 reasons. One is people just stopped choosing it. Because in a long-term care event, what a client's really interested in is the money is important, but it's access to resources. So how many resources can I get to reduce the amount of time I'm spent managing a claim and or providing care to somebody? So more people started choosing reimbursement, where we take care of everything for them to give them more independence and dignity and control over the situation. The second reason we stopped basically was fraud. And the industry stopped is because the amount of fraud being perpetrated, and it was being perpetrated by family members. So does it make reimbursement or indemnity better than the other? No, it's a feature within a product, and you should build the program around what fits the client's needs. Some people might not want a licensed caregiver in their house. Some people might live 200 miles from a closest caregiver. I'd say you probably want to look at an indemnity contract then. The average citizen within care is going to be looking for the resources available, wants more time to spend managing the process instead of delivering the care, hasn't had a conversation with their kids, might not have kids available or family close by. Build a program that meets their needs. What's most important is that they've already thought about this before they've gotten into it. So one's not better than the other. Just when you're dealing with the individuals building the program for you, they can use the different policies and different things to build a policy that's gonna work for you in the long run. But what you should walk away with and what the different companies can do, whether it's One America or whether it's a competition, there's enough flexibility to build a program that your clients are interested in. The other reason we do reimbursement is you should be familiar with publication 926 from the IRS. Basically, it says if you pay anybody in your household $2,400 or more a year other than a spouse or a child under 18 living with you, you have to file a W-2. If you're paying caregivers and hiring caregivers directly, which includes your children, you have to hire an accountant to track all that and provide them with a W-2. Now, I know the standard, well, it doesn't matter because I'll just give my child the money. They just hired 84,000 more IRS agents. Why do you think they're hiring them? They just look at people's bank accounts and they say, why do you have $80,000 more in your bank account this year and you don't have a job than what you were doing? And anybody who's been through it will know there's an added expense, an added expense and duty to find an accountant, to follow that person's job, and to file a W-2. So it's just more reasons people choose reimbursement. Again, is one better than the other? No, but it's not as easy as thinking this is going to be easy. It's not easy. It's not an easy process, but by having a plan, by working with the people behind the scenes, either North American or Concourse, whoever it is that are working with you, to build a program the client needs. But what you have to keep in mind is all clients are saying as far as the opportunity is start the conversation with me. Let me know you have it available. Is everybody going to buy it? No, but you'd be surprised by just mentioning it. And there's different ways you could do that. Ask me, how are your parents? Your parents doing? I can guarantee that people selling Medicare too, 9 out of 10 will tell you a horror story. 9 out of 10 will tell you a horror story. They're taking care of their parents, they're paying for it out of pocket. It's eating time out of their own lives. They're running 2 households, and they'll always say, I never knew it could be this hard. I wish I had more access to resources to get questions answered, to get bills paid, not just to have money available to them. And once you start that conversation, you'll be able to bring it to fruition. And I'll leave you with this industry study that was done. More wealthy people, so people in the 5 to 25 million asset group, own these policies than any other segment of the population. So you might say, oh, Kevin, of course, they got more money than anybody else. They can afford these policies. It's not why they say they're buying them. They're not saying it's because of their money. They're saying because they know how hard it is. And they want to have the coverage and the time back in their pocket so that they aren't spending all the time doing all the things that I just said. The other thing is when clients are asked, who do you talk to when you want information on long-term care? only 1/3 are saying they're advisors. Another third say family and friends, and the family and friends don't know where to get the answer, or work colleagues that they're asking. Why aren't they asking their financial advisors? They just didn't know it was available through them. If you just bring the conversation up, use the resources that are available to you to get the questions answered and to build these programs, you will see a lot more success, a lot more income, and a lot more sales being made over time. And we as a company, One America, we offer on every Friday at 10 a.m. and there's links that can be sent to you. We have what's called a deep dive, which we go over individual sections. 1 week we'll do the annuity, 1 week we'll do qualified money, 1 week we'll do continuing pay. So it's a deep dive on a particular subject. And then the other week is just a full view of the portfolio. So I'm going to spend a lot of time today showing you how the product works and things of that nature. It's available to you. I impress upon you to spend some time of your own to sit in on those webinars. And you can do many times you want. We do them every Friday. But keep in mind, again, 77.2 million people across the United States, only 7% are currently covered. So you have to ask yourself, if we have 77.2 billion people that need this, and as an industry over the last 40 years, we've got all these great product features and innovation. Now we got asset-based products, and you got professionals all over that can help you. How come we can't get more than 7% of the population covered? It's not the products, it's the conversation. And just starting the conversation and understanding that is going to bring more success to you, and we're available to help you anytime you want. But I'd be happy to take any questions.
There is one, Kevin. My friend Billy Snyder has asked. So the IRA can be used for the product, but how does the RMD work with that?
Very good question. Sorry I didn't cover that. Whatever we're sending out on an annual basis for the premium, you can use towards your total RMD. So you can have 10 different IRAs. Again, we'll give you, you send us 100, we're crediting you with 125,000. It's the client's money. They got access and control over that. We drain it over 10 years. So in that situation, we would be giving them a 1099 for $12,500 a year. They can report that $12,500 as income or towards their RMD on an annual basis. So it might reduce the amount that they have to take out of other IRAs while they're getting the coverage they need. And a great question on RMDs we usually get is, how about that 75-year-old client? And you find this all the time. How many of us have worked for 40 or 50 years, put all this money in IRAs, you retire, and your other investments and pension are providing you enough income. Now you're 73 years old, you have no long-term care coverage. You're finally starting to realize, hey, I better get some coverage. I may need this at some point in time. It's going to deplete my other assets. And I got to take this RMD every year that I don't even need at this point in time. You can actually use that IRA to fund care that they need. And actually what you've done is converted it to life insurance, which if you die and never need it, it's been passed to the children tax-free. And if you die during the first 10 years, the kids not only get the full value of the life insurance, they get whatever's left in that annuity because they've never lost access and control over that. So it's a great leverage of their dollars to have money that's available to them towards a number of different things that they may be concerned with.
That's great. I don't have any other questions here yet, but if anybody else has any, please post them here on the chat. I'm glad you mentioned just talking about this with your clients. I mean, it's such an obvious thing, but I've got a email newsletter that I send out. Actually, I've got two. I send out a general email once a month. Then I send out one that's specifically for people about 63 and older. And I've been talking about long-term care more recently, and more specifically recently, with statistics and stories and things. And suddenly people are asking me about it. It's like magic. So I think that's key. Just talk about it with everybody.
And there's a lot more. There's more companies doing this. And when you have companies with the companies that are on this call today, or we're putting more out into the press. You're seeing trade magazines every single week. There's a different article on long-term care, which you never used to see that before. But again, the aging of the population, clients are being put in these situations. They're feeling the pain. Churches, and I bring this up all the time, your greatest resource right now is go to your local church. And I guarantee you this will work. Ask them, are you having caregiver meetings? Packed house every single week at every single church. They have to do 2 or 3 meetings. There's so many people asking for advice on caregiver meetings. And I'll give you an idea how to put it together. Go to your local Alzheimer's Association. Say, we can bring somebody in from the Alzheimer's Association to do a 30-minute talk on how to navigate as a caregiver. They do it for free. They love coming out and doing these talks. You follow it up with, you have a group of people experiencing this with their parents right now that are feeling the pain, that are feeling the emotional pressure. You say, what have you done for yourself? Because they're interested in is looking forward, what does this mean to me? But I'm telling you, every church across the country is having these meetings right now. They're looking for people to come in and talk. And it's an easy resource for you to get in front of people that are interested in listening to you and talking to you about it and starting the conversation. And in fact, I was with a big Medicare agency yesterday up in Ohio, and I gave them that idea and they're running with it. They're like, I never thought of that. And that's true. I know my church does it. And I know that I live in the South and all the churches I get flyers from my churches and they got 8 weeks of programs lined up on it and all on this topic. So great way to address it and a great way to get in front of people.
That's a great idea. Concourse, what do you got for us today?
I'll jump in real quick. So one thing that Jake and Kevin did not mention is the resources that the carriers provide. We have phenomenal service and support from Nationwide, from One America. We also have resources with Lincoln Financial. And one of the things that we're here to offer you at Concourse, whether by myself, with Phil, or your internal Jenna, is we'll do the case design for you. You know, this is a conversation that a lot of people do not want to have. And, you know, and they go in and they make the mistake of putting 15 illustrations in front of them, and they're trying to make the sale based on an illustration. And that's not the way that you need to present this. And so go have that conversation with your clients, do some fact finding, and then bring that information to our team, and we will help find the best product fit for you. So you're not going in, you know, I always tell everybody, I mean, if you're from the South and you know what this means, but, you know, nobody wants to go into TJ Maxx when they need one thing, because they go in there and they can't find the one thing they're looking for because they gave them so many options. It's overwhelming, you know, and that's, you know, and that's what a lot of people have a tendency to do. But we're here to do that case design for you, to find the perfect fit, and also to provide you resources to help have the conversation with your client. And I'm pitching Jake and Kevin, you know, if you need some assistance on that first call, if you need some assistance on how to do that first meeting, they're available. They will help get you to where you need to be and get you comfortable having those conversations. So don't discount the resources that we have internally and externally. And the same goes for Phil. Phil's in the field. If you have a client and you need that extra resource, that's what we're here to provide for you.
And when you're starting a conversation, typically the way we've been trained in the industry, the way we think about this, and you are talking about long-term care, if you want to do more to increase your success rate and decrease the bad looks on people's faces when you ask them, don't ever ask somebody, do you have a long-term care plan? Throw that question out. Simply ask clients, describe for me the lifestyle you'd envision for yourself should you never need care. So you just ask them about their parents, and they're giving you the nightmare story of what's happened with their parents. Say, well, if you were ever in that situation, what's the lifestyle that you would describe that you want to experience? I can tell you what they're going to say. Everyone's going to answer the question saying, I'm at home, surrounded by my grandkids, everybody's got a smile on their face, the sun is shining. It never happens that way, but then you're having a conversation about delivering a lifestyle for them. And you can build a program based on the lifestyle they describe for you, where they're going to get care from, where the care is going to be provided, who's going to be providing the care. You've already addressed all those questions in their answer. And then working with the individuals behind the scenes, they can build the program that meets the needs of clients describe them for you. Because if you just ask them if they have a long-term care plan, they're just going to tell you, I'm going to pay. They'll tell you one of four things. You're only going to get 4 objections you need to learn to respond to. I'm going to pay for it myself. It's never going to happen to me. My kids are going to take care of me, which you should always ask them in that one. Have you had this discussion with your children yet? And the last one is, well, if it does happen, it's not going to be that bad. I'll be dead in 6 months, which they have no way of knowing that. And 6 months is a long time if you're taking care of somebody 24 hours a day. It's a lot longer than people think. So be prepared for the objections, but simply ask people about their lifestyle and less about a long-term care plan, which basically kills the conversation right off the bat. And it's easy for them to object to it and get away with it unless you're prepared to answer how they're going to respond to that particular question.
And I was gonna, this is Phil, I'm gonna dovetail off of what Misty said. You know, as far as the infield support, I'm actually sitting in an office in Dyersburg, Tennessee right now. I'm not a Tennessee fan, but the guy's office that I'm using is. But it's your role as the agent, your role as the advisor is to become the problem identifier and then rely on us to become the solution provider. So, you know, nobody's expecting anybody to be an expert on everything. I've been doing this 20 years. The only thing I know now is what I thought I knew, which is a lot, which it turns out to be not a lot, right? So there's a lot of different options. Every single client's going to have a different solution or a different fit. So if you can identify that problem by having that conversation, by using some of the things that Kevin talked about, using some of the openers that Jake talked about, just kind of crack the door open a little bit, and then, you know, come talk to us and we'll help with, you know, Jenna and Misty and the rest of the team. We'll build out something. And then if it looks good, that's when we can facilitate the sales support process. So, you know, you're not going to, it's not fun jumping into some unfamiliar waters, right? Without knowing exactly what you're talking about. That's not the way to approach it. The way to approach it is just get that conversation started. Once they show some interest, pick up the phone and call me. That's my job and I love doing it. So, and then from there we'll be identifying what the best solution is, and then we'll prepare you to make you look like the expert when it comes to that delivery. So, you know, like I said, become the problem identifier and then rely on us on becoming the problem solvers.
And I always like to describe that as the fishing analogy. So you're going out fishing. You got 2 choices of a fishing pole. A top of the line Zebco rod and reel with a top of the line line and all the gear that you need. Or a bamboo 10-foot pole with a line, a bobber, and a hook. Which one are you going to catch more fish with? Pole's not going to determine it. It's the person or the resources available to tell you where the fish are and how to catch them. Where the resources that are available to assist in showing where the fish are, how deep they are, how deep you can go, and what tools you really need to catch them, which is the product answer and the features answer and things of that nature. So that's where you can rely on us to show you where the fish are and how to catch them and make sure you get more in the boat than you leave in the stream while you're out there.
That's great. I have a question here from Patrick about the fact finder sheets that you guys use. Can you send those to me, the best one you've got, and I'll make sure people get that. That's a great question. I want to put in my plug for Concourse again here. When I started in the business 19 years ago, wow. I knew nothing. I still feel like that some days, but I knew nothing, and so I got hooked up with them. When it was a smaller organization in Chattanooga that is now part of Concourse, but I got hooked up with them early on, and just with life insurance first, and then disability, then long-term care. So just kind of all along the way, when I have clients that ask me about something, anything that I didn't know anything about, I would say, do you do that? And I would say, yes, of course I do that. And then we get off the phone with them and call Concourse or whoever immediately and say, how do I do that? So they've been amazing. And the reason they're amazing, in my opinion, is that since I know nothing, I can describe the client, describe what's going on, and they come back with a bunch of solutions or a bunch of ideas, and and I can go back to the client confidently with the quote or with the knowledge that I just acquired 5 minutes before that, and the sale without feeling like, you know, a complete idiot. So they're great for hand holding. That's exactly what I needed this whole time. And I've got another question here. I'm gonna try to read here. Yeah, I can send that to you. She's asking about the fact finder. I'll send that out to everybody that's on the call today.
And one of the things to think of too, my 9-year-old grandson plays soccer. And after every game, I ask him the same question. I don't ask him if he won. Don't ask him if he lost. Don't ask him how well he played. I say, what did you learn today? What did you learn today when you were out there? Did you learn how to play your position better? Did you learn when you're not in position or you're not farming your piece of land, how it affects the rest of the team? Think about that as you approach talking about palliative care and extended care with people. You'll be learning every day. Don't be afraid to fail, but always, what did you learn every day? And you'll learn by asking questions, by not being afraid to bring the subject up with your clients, and you'll have a lot more success. But the more you mention it to people, it'll do 3 things for you. It'll build your confidence in your sales over time. I can guarantee you that. It'll build your referral network, because like I said, not a lot of people are talking about this or are comfortable. And what happens when that client's at the cocktail party? I'm sure you get Medicare compliments all the time from people, and they send you referrals. It's a great referral source by me mentioning this to people, because they're looking for it. They're going to say, hey, so-and-so just talked to me about this. And boy, they talk to me about how I can get the lifestyle I envision for myself. And the last thing, it gives the person how to answer the question at the cocktail party, because the client's never going to say, I bought long-term care. But they will say, my financial advisor is doing a great job of putting together programs for me that meets the lifestyle I envision for myself at some point in the future. Don't you think that client's going to want to come and talk to you? So take the time to learn every day, ask questions, wear the heck out of us, wear the heck out of Concourse. We can give you 1,000 stories of advisors that started the same way. Top producing advisors, $1 million producers that simply said, I just need to ask more questions right now and learn this, that have even added to their practices and their success that they're having out there.
Here's another question this is from Belinda. She says, the caregiver group is an awesome place to get leads. What are other places to use besides just your referrals and books of business? So what other groups or what other organizations or places, what's been success for you guys?
I'm not hearing any one place. It's more the clients. You want to focus on your book of business. It's people 50 plus that are buying this that are more likely to take a look at it. The 2 most likely people to buy this are females that have recently been through a family situation, and couples over the age of 55 or 60 are your 2 most likely groups. If you just listen to people, if you're talking to a female that just got done taking care of their parents, I can almost guarantee you they're going to buy a policy. They've been feeling the pain. And traditionally, they're the caregivers in the family, the daughter-in-law, the daughter, somebody within the family. It's usually a female that's given the care, not a male. That's just how it works out. But those are the people most likely to purchase the policy at this point in time. But we're quoting people as young as 35. But as I like to say, if your feet are touching the earth right now, and unless you plan on dying young, you're a prospect. You know, it's anybody in your book of business, and you're talking to people in that age group now. Unlike other advisors, your age group or the people you're talking to are more familiar with this and the need to plan for that care than other groups of individuals that we deal with on a daily basis.
Well, I've noticed too that when a guy calls me about long-term care, his wife is in the background telling him what to ask me. So.
And also don't discount David. The other day, David had mentioned this, and it really hasn't been hit on today, but business owners, you know, the small business owners, self-employed, those are great opportunities. I mean, we all know someone, you know, that owns a small business, or, you know, we have clients that have small businesses. It's a great opportunity, you know, and like I said, David touched on that the other day about, you know, they have a whole program for business owners. So, you know, really the answer, going back to what Kevin said, is everybody, you know, everybody you speak to, because, you know, one thing that, we decided years ago, you know, I actually managed the annuities and the long-term care at Concourse. And the reason why is because we started looking at this more in depth, and we decided that long-term care planning, and that's what we're calling it. We're not telling our clients that, but it's really part of retirement planning. Because these asset-based long-term cares, there's that word, it's still an asset. You're not giving up your resources. If you need traditional long-term care, that's great if you need it in that, but it's still retirement planning, and it's responsible retirement planning.
And very important to keep in mind the value of Concourse. All the companies that they deal with, we all have advanced planning departments that are more than willing to deal face-to-face with these businesses to make sure the program is being built in the most tax beneficial way for them. When we're talking about long-term care and asset-based products, it's C Corps and nonprofits that are kind of a shoe, and it's easy to explain how it works. But as you run into LLCs and S Corps and privately held and things like that, we all have advanced planning departments available. We'll be more than happy to talk to the CFO. We'll be more than happy to put you in contact with them to see if it actually works from a tax standpoint to be more beneficial for those individuals to purchase it through the business. And that, regardless of who the company is, we all have that available.
I don't see any other questions. Jake, do you have anything else you want to add?
Yeah, no, I appreciate the time on the call. I think the one thing that I would kind of leave everybody with is, and Kevin had touched on this as well, is the importance of the language that we use and how that can kind of steer the conversation. You know, when we use the words long-term care, you know, we had kind of all agreed on this already, that long-term care planning, when you mention that to a client, what are they going to think of? What are they going to say? They're going to envision themselves in some type of facility. You know, that's where their head immediately goes. And the language that we use with them is so important, because maybe instead of using the words long-term care, we talk about extended care planning. And when we mention those words, extended care planning, then your mind goes somewhere completely different, because when they hear the words planning, they think about something that we're going to plan for just like any other part of the comprehensive financial planning process, whether it's college, whether it's weddings, whether it's, just like Misty had said, retirement planning and protecting all of that. That should be viewed, extended care planning should be viewed no differently than anything else as part of the comprehensive financial planning process. So I think that's just kind of one takeaway that I would leave everybody with, is just kind of the language that we use when we talk through that and how that resonates.
And to follow up on what Jake's saying, what long-term care is, first of all, 75% of the claims paid in the history of the industry, home health care. These are stay-at-home policies. 13% are assisted living, 12% are nursing home. The greatest growing segment of care planning right now is adult daycare, believe it or not. It's the baby boomers who are still working. They got to take mom and dad somewhere during the day, but they're taking care of the care at night at home and providing the care there. So, and regardless of the company, regardless of the products, we all pay regardless of where the care is coming from. But what long-term care planning is, or extended care planning, it's the preservation of a lifestyle and your money for both you and your family that you've envisioned for yourself, that gives you more access and control over that lifestyle and your money. And it's not only the most effective way to do it, it's the most efficient way to do it whether you're talking about from a tax standpoint, from a financial standpoint, from a payment standpoint of how you pay the claims. It's a preservation of the lifestyle and access and control over it, the most effective and efficient way possible. And if you look at any other way you can address the situation, use that criteria, you're always going to come up with the best path is to have a plan and to somehow predetermine the financing of that plan at some point in the future.
Cindy Johnson had this question on here about the portability of long-term care plans that are set up through business. Are those plans portable? I think that there aren't any true group long-term plans out there.
No.
These are all kind of individual on a list bill. Is that how that works?
They're either done on a list bill basis, they're individual contracts, they're individually underwritten. They're non-discriminatory. You can offer it to just the 10 top executives in the company if you want to. And most companies, of what they do if they're doing a Section 162 bonus plan, will have some sort of their own vesting schedule. We don't put that together for them, but we can give them, our advanced planning department or any companies can give them some recommendations. But the plans are 100% portable. That person leaves the company, they want to pay the premiums themselves, take it with them. It's an individual contract. It's usually paid as a bonus to the company or to the individual. A lot of times it's a golden handcuff. Got a 57-year-old executive. You want to make sure he sticks around for 8 or 10 years. You give him a joint policy for long-term care that the company's going to pay for, and they get to take it with them afterwards. They're going to have to decide hard on whether they're going to leave or not at some point in time, but it's completely flexible. And because we offer different, company to company offers different features in their product, that's why it's best to start with Concourse, and then the companies would work closely with you on, how to best implement that within the business and what they're trying to achieve.
So Billy Snyder has a comment here. He says, Tom Hegna says to ask, how do you plan to pay for the care in the long term? That's good. And I had to grab my book, so I can show you that I can read sometimes too.
So what do you, let me play devil's advocate. 100% of clients will say, I'm just gonna pay for it myself. What do you say to that? I'll tell you, I give you the follow-up. I had this conversation with my brother-in-law 2 weeks ago. I think I talked about it Monday. He's got every dime he ever made. He's got the $100 he got at his first communion. He was 10 and he's 62 now. So the reason why he's really wealthy. And he asked me, why would I buy a long-term care policy or plan for it? I could pay for it myself. I said, and I do this with every wealthy client, or everybody says they're going to pay for it themselves. I go, you don't have a money problem. You have a resource problem. You think it's easy to think just because you have money, it's going to be easy. So tell me, your spouse needs care tomorrow. How do you manage that process? Where do you find a caregiver? How often do you hire them? Where are these caregivers? What type of care do you need? How do you put a plan of care together? If the company is not working with you, if you don't have you have to put a plan of care together. You have to figure out what kind of care this person needs. Where's the care coming from? So this is something your doctor's office is going to answer for you, and ask anybody who's been through the situation. And he realized in the conversation, he goes, I understand what you're saying. It's leverage. I only got to put up a smaller portion of assets, and I'm going to get back regardless of what happens. Well, the family will get it back if they die. They wouldn't get it back themselves, but they're most likely to lose for long-term care. But I have access to the resources I need to what? Give me more access and control over the lifestyle I've envisioned for myself. And it's not only effective, it's the most efficient way to do it. So again, I can tell you exactly what we do this, Jake does it, and Misty does it every day, 8 hours a day. You're out there talking to people. Not a lot of objections you get, but asking them how they're going to pay for it, they're going to give you that answer. Pay for it myself. Or I don't have a plan. Or they'll say, I just hope it isn't going to happen. You know what hope is? Hope is thinking the problem will take care of itself. Never does.
That's great. Well, we're getting close to the top of the hour. I'm going to wrap it up for today. So tomorrow, these guys are all back here, or at least invited back here tomorrow. And we are going to talk about, the topic tomorrow is, I've learned all this stuff this week. Now what do I do? So we'll talk about the next steps and how to get started. Not only just talking to your clients, but also the process. There's some certification type of things. There's some learning. There's some webinars. There's all kinds of stuff we'll talk about tomorrow. But I thank you guys so much for being here. It's been great. I love this. This week has been awesome. Good participation, and I'm looking forward to seeing you all tomorrow. All right, we'll see you.
Thanks, everyone.
Thanks, everybody.